Well, homeowners, be warned. Paying your mortgage bill early might be just as bad as paying it late. That's what one Florida man discovered this month when he found out that his home was in the process of being foreclosed on. Etienne Slidor says that he never missed a mortgage payment. Last year, Wells Fargo approached this Walt Disney World bus driver and offered him a temporary loan modification. The agreement was that if Etienne paid his modified loans on time for 4 months, that modification would become permanent. He said that he not only paid his loans early, but that he overpaid them. Wells Fargo says that he was violating the fine print of the payment guidelines by paying them early. For more on this case and a bigger look at the state of banks, I'm joined now by attorney Lamaya Henry, who represents Etienne Slidor. Thank you so much for joining me. Wells Fargo has called this an extremely isolated incident. Should we take this bank at its word?
I don't know. I don't have any idea. I hope this is not happening a lot.
Sure. Now, we contacted Wells Fargo about the case, and a bank representative sent us this statement saying, quote, "When our customers face financial difficulty, we look at all of the available options to help them stay in their homes. If attempts to meet the approved requirements for one program are not available, we will look for others. In Mr. Slidor's case, we have been able to find an option that will allow him to maintain home ownership. When borrowers face challenges paying their mortgages, it's important for them to continue talking to and working with their lender to explore every possible opportunity for assistance. For example, when Wells Fargo customers begin working with and communicating with us in their first 6 months of financial hardship, we are able to help 7 out of 10 customers avoid foreclosure." So does this seem to adequately address your client's concerns?
Well, let me say first, I don't know that this has been told, but prior to this whole modification issue, Mr. Slidor was not behind on his mortgage. All of his payments were current. There were no deficiencies. He had never made a late payment. He just happened to receive a letter from Wells Fargo agreeing to extend to him a loan modification, and previously had been out of work for over 2 years. So when he saw this paperwork lowering his mortgage, he thought it was a great idea for him to take advantage of this opportunity.
Now, Wells Fargo says that the fact that this man paid early and more than he owed violated the terms of their contract. Why would a bank be upset about someone paying early? How does this cut into the bank's profits?
You know, I just don't know. I thought the whole goal of the banks extending money to people was to get paid back. And not only did he pay them back, but he paid them back early. I cannot rationalize why he would be penalized for paying early.
Now, did the bank offer Etienne the chance to pay the money on time, to go back to the original schedule or anything like that before they decided to foreclose on him or start the process of foreclosing on him?
No, actually, Mr. Slidor signed the permanent loan modification document, sent them back to Wells Fargo, made his first payment, and then when it was time for the bank to deduct the second payment from his bank account, they never did that, and so he couldn't get an answer from them as to why they would not take the payments. The next correspondence that he received from the bank was a letter notifying him that his case was being sent to an attorney to start the foreclosure process.
Now, as his lawyer, what has been your impression of the legal team over at Wells Fargo? I mean, are you outgunned?
Well, I'm just a small solo practitioner, and I don't have the resources that Wells Fargo has, but it's my hope that Wells Fargo will make this situation right.
Sure. And what is the next step in your client's case in order for Wells Fargo to make this right?
Well, we are talking to Wells Fargo. Hopefully we can walk out with a permanent modification for Mr. Slidor so that he can just move on with life. He wants to make his payments, and he just wants that peace of mind of knowing that his house will not be taken away from him.
Now, obviously, he's gotten quite a bit of attention from the media, both local and national. How has the media attention in this case actually affected the way Wells Fargo is treating your client, or has it?
Well, I think that it has, because this lawsuit has been pending quite some time, and it wasn't until after the media attention that we actually heard from Wells Fargo.
And very interesting. Thank you so much for joining us, attorney Lamaya Henry. She represents Etienne Slidor.